Stocks are at an all-time high. Is the threat of a crash gone and the bull run is just starting? What should you do? I'll answer those questions and more for you right now. Welcome back, everyone. In this video, we will talk about the 5 reasons the next bull run is here and no crash is coming. And I'll give you a warning before you buy right now. And if you like making money and are looking to learn and invest alongside a guy with a crooked head and no real life on Friday nights except writing out ideas for YouTube videos, but I do have a great community of new cool kids where everyone is invited to be one, go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and hit the like button as well. And don't forget to follow me on Instagram too. The little tag right there, you see it? Yeah, follow me there. And remember, this is for entertainment purposes only. So if you've been following my channel for a while, you know that I have a couple of videos out there about why the market may crash. I'll link that at the end of this video, so make sure you stick around until then so you don't have to search for it. But I do read most, if not all, of my comments. So many of you in the comments have been hounding me about just making videos about the crash and being like every other YouTuber. Guess what? I don't sit around and try to follow other YouTubers and then copy their videos. But I do read the comments, even the ridiculous ones. Kind of like this. So because I do read them and I hear you, I decided to really dig deep this week and through the weekend to find a case for why the market is just at the beginning of a bull run. So let me lay out the 5 reasons the bull run has started and we won't have another crash. But before we get rolling, make sure you smash the like button, as I know this video will get a ton of hate. And I cannot make everyone happy no matter what video I put out. The first reason this is the beginning of a bull run and no crash is coming, the Fed. We have all heard it by now. You cannot fight the Fed. The same goes apparently for the stock market. Apparently they've heard it too. The Fed money printer has been working overtime, putting trillions of dollars into the system. Like record levels that aren't even close to any other record before. And yes, if you really think about it, $1 trillion with a T, I got that one right, you guys see that? Much less $6 trillion is just an unfathomable amount of money. Got it right. We can argue all day long that the Fed has overstepped its bounds and has distorted this market significantly. But I'm not here to debate that, even if I agree with it. But what is not debatable is the short-term effectiveness of the moves by the Fed. The Fed has done its best to ensure that the returns on bonds are so low by signaling its willingness to buy unlimited quantities of treasuries and government-backed mortgage bonds. And furthermore, it's even ventured out into buying corporate bonds, which helped yields on those bonds, to go lower. One of the goals of the Fed putting all this money in there is to push investors away from the safety of the bond market and into riskier assets, like stocks. So some analysts at JP Morgan recently noted that these programs by the Fed likely has a bigger positive impact on equity valuation compared with the negative impact of the temporary earnings loss. Translation? The Fed's efforts to keep interest rates and bond yields low has more than offset the collapse in profits for S&P 500 companies. This has obviously kept the market afloat even though corporate profitability and the economy look like they will be gloomy for a long time. We may not agree on if the Fed should be doing this or not, but we can all agree it is having the intended results so far. Oh yeah, and the Fed liked and subscribed to my channel. So don't fight the Fed, just do it. Hey, it's not me, it's the Fed, you can't fight them. Just do it, it's okay. The second reason why a crash is not going to happen, 2020 is a repeat of 1968 in the US. I was shocked when I started researching 1968 and saw the similarities to right now. I mean, it was eerily similar in a lot of ways. But back in 1968, we had a terrible year here in the US. Martin Luther King and Robert F. Kennedy were both assassinated. And looking at today, we've had several awful murders here in the US this year. In 1968, protests were happening around the nation and the entire world. And today there are massive protests around the world and civil unrest. Both in 1968 and now, we will have, and we had, a presidential election. The 1968 presidential election featured a highly divisive contest between Hubert Humphrey and Richard Nixon. Don't believe me that it was divisive? Do your research on that and come back. It was divisive at the time. And if you don't think this year's election won't be one of, if not the most hotly contested, divisive, most ridiculous election ever, you're just not even paying attention to anything. I might have to go on hiatus during the fourth quarter due to the ridiculousness that I think will ensue. I'm gonna at least have to turn off the comment section off all my videos because it's just gonna be out of control. And there's more. There was also the H3N2 Hong Kong flu pandemic that killed nearly 100,000 Americans and millions more globally in 1968. Again, eerily similar to the illness that I don't know if I can or cannot say here on YouTube. Still not clear on that, so I'm not gonna do it. But that will probably kill at least 100,000 Americans, and who knows how many globally by the time we have a vaccine or a cure comes about. So this all looks eerily similar to 1968, like way too close. So how did the markets react in 1968? The end result for the market in 1968, after a 9% drop from the S&P 500 from January to March, the market rallied 24% and ended with a price gain of 7.6% for the year. Thus far in 2020, the S&P is still down 1% year to date, but it has rallied over 45% from the March lows. So if this market continues the same pattern we saw in 1968, there is not a crash coming. And the third reason I don't see a crash coming is computer traders. For those of you that don't know, algorithm trading or electronic trading has been rising for years. If you haven't read Flash Crash or The Quants or any of those other books about these guys, it's fascinating and gives you a glimpse into how this type of trading happens. But how does this relate to the stock market not crashing? Because the algorithms are designed around an algorithm that consistently looking for anomalies to make money. Like the YouTube algorithm that gets happy when you smash the like button. And remember, they do all of this in nanoseconds or milliseconds or whatever the tiny measure of time is. Hey, I went to public school, don't judge. The point is, they are always looking for opportunity based on numbers, and they don't read news headlines. So whereas you and I can see the protests and other issues going on right now, the computers cannot. And so they don't trade on it. So basically they're simply trading only on the data within the market, which is one of the reasons why you hear the market is disconnected from the real world. Because it is. The real world doesn't exist in the algorithm world. But what about the human investor? Not all hedge funds or individual investors or banks allow the computers to trade uninhibited. You're right. But the models they use to make decisions on use the same types of algorithms the trading computers use to trade. So they are getting the same information devoid of anything but data. So it's up to the trader to contradict the model and move forward based on the news. And for now, it seems the computers are winning that battle. And the fourth reason, unemployment dropped huge, showing a V-shaped recovery may be in. Now you guys know I don't do politics, so let's not get started on that. But whether you use the adjusted number or the reported numbers, unemployment dropped huge from April to May. And with the majority of the US and the world reopening further in June, that number should go down big again in June. So the biggest reason why the economy would be staggering along and not getting going is showing that it can whipsaw back just as quickly. Still a long way to go, but the surprise, and it was a big surprise to everyone, shows that the unemployment may not be as bad as first reported or thought and is recovering faster than expected. And that would stymie any crash that may have been coming. And the fifth reason why the market may be on another bull run and not crashing, the old guys are finally behind on the times and outdated. And there's more new investors than ever. Warren Buffett is currently sitting right now on $130 billion plus in cash. He sold all of his airline holdings, missing out on all the gains they just had if he had stuck to his long-term buy and hold principles. He lost around $50 billion in the first quarter and obviously hasn't made any significant plays in the second quarter. So he has also missed out on the huge correction that has brought the market back up. Now, there are videos and articles popping up everywhere stating that value investing is dead and that he's completely lost his touch. ARK investment is now the gold standard in some circles, and the retail investor has a bigger position and voice than ever before in the stock market, with trading platforms like Webull and Robinhood helping give the retail investor a much bigger voice. Link in the description if you would like 2 free stocks from Webull. But the pros like ARK Invest and the retail investors, which are you and I, us, are all outperforming Warren Buffett during this crisis. Warren is not infallible. He has made mistakes in the past, so it may be a sign that his time has come and he missed this run. A warning before you buy now. Hopefully you feel like I've effectively laid out the case for why there won't be a crash, but instead a continued bull run moving forward. Having said that, there is a counterpoint video coming shortly after this one showing the other side of each of these points. So make sure you are subscribed if you aren't already, and click the bell so you don't miss out on that video when it drops. It will drop this week. So given everything I just laid out, what should you do right now with stocks, and what is the warning? This is a far more complex answer than it would appear at face value. Why are you wanting to buy right now? And that is exactly where the warning lies. And be honest, is it FOMO induced? You've done no fundamental analysis really, you have no plan, no strategy, just FOMO. The link to our FOMO group is in the description, and I've made a couple of FOMO videos. I'll link those at the end along with the crash video just for you so that way you don't have to find them. But if FOMO is the reason for your buying, you need to stop and take a pause. Does that look like? Yeah, that looks like stop, doesn't it? Yeah. If you suddenly want to invest because a coworker made 22% on his Carnival stock position on Friday alone, like I did, and yes, I think it's utterly ridiculous. There is no reason for it fundamentally, technically, or even in the news cycle. Nothing. But if that's your reason for jumping in right now, you may want to evaluate your decision further before jumping in. And no, just saying, I want to invest, is not enough of a reason to jump in. You need to have a plan, strategy, understand what you're investing in before you ever do it. What am I doing personally? You'll have to wait until the counterpoint video is released and I will show you exactly what I am doing and, tie it all together. Ooh, I did that right. Tie it all together into the context of these 2 videos. It will make a lot more sense then, I promise. So the next thing you need to do is click these videos right here to get the data behind why I see a crash coming and for help with FOMO. Thanks.